Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It was a mixed day on Wall Street, ending this shortened trading week. On Friday, stocks turned mostly lower as investors navigated a flurry of developments from the Iran-Israel conflict to managing uncertainty around the Fed. The S&P 500 and the NASDAQ both closed the session lower, the Dow eking out a day in the green. It's been a long road for Paramount Global and Skydance Media in their effort to merge. It's been a very complicated multi-billion-dollar deal. BET is still under the Paramount umbrella, and we're talking with its former CEO and author, Deborah Lee, on what the holdup has been and what to expect next. And speaking of deals, basketball fans bearing witness to the highest price ever paid for a U.S. sports franchise in history. Taking a deep dive into the latest on that legendary Lakers deal. Well, stocks closing mixed today to finish off the week, and Yahoo Finance's Jared Blikre is here with some of the day's market actions.
Well, Josh, I hate to lead with a downbeat kind of headline here, but Fizzle Friday is what I'm leading with. And that's because the indices, we've seen volatility contracting. We did have high volume today, and I've been talking about this, and let me just switch over to the indices. We had high volume because it was triple witching options expiration. We had $7 trillion in notional just wiped off the board. And yet, we didn't really do that much. Here's the Dow. Here's up 8 basis points. It looks like 35 points. And if I show you the 4-day chart, you can see it's just been a lot of choppy action from the upper left to the lower right, but we didn't even start up that high. Same thing for the NASDAQ, same thing for the S&P 500. And even if you take a look at the VIX was just kind of meandering around that 20 level. That's one of those big psychological magnets, but really not even a lot happening there. There was a lot happening in crude oil, but time limitations here. We don't have time to get into crude oil, do we?
So let me ask you this, Jared.
Yes.
It feels like summer. I mean, is it time, maybe just already close the books on June at this point?
I'll tell you what, there's an interesting phenomenon that begins next Thursday. The last 3 trading days of June and the first 6 trading days of July is called Christmas in July. And it's kind of like the Santa Claus effect. So those 9 trading days have a really high historical, potential to run. And I'm going to be covering that in depth next week. So we have something to look forward to. And at least that would put maybe some green. But that doesn't take away from the fact that we don't really have a lot of volatility, at least at the index level that we're talking about here.
All right.
So this brings me to my next point, buying the chip dip. And I'm going to go to our heat map. I'm going to show you what chips did today and also over these 4 days. Today was kind of a downbeat day for chip stocks. This is a 4-day look, and I'll show you the intraday just real quickly so you can see only a couple names in the green, AMD and Micron. But those are 2 names that I want to chart here because they have been perking up recently. And here's that 4-day look again. You get a little bit more green. You can see NVIDIA up about 1.3%. Here is AMD, and let's put a year-to-date chart on there, and you can see just poking into the green. So chips are very cyclical in nature. They're tied to the business cycle. They got hurt a lot in the Liberation Day sell-off, but AMD has climbed back and also seeing some action in ARM. That was up 7% this week. That's up 17%, and you can see it didn't dip quite as far as AMD into the red. And then Micron was another leader in the S&P 500 this week, and you can see that has now surpassed its highs from earlier in the year, and it's up almost 50%. So that's not nothing. So count one for the chips, at least some of them.
I know big picture, the market's been relatively quiet. What are you seeing kind of under the hood though, Jared?
Yeah, and I'll tell you what, I am looking at some meme momentum, and meme momentum is mooning, and I just like alliteration, that's why I put that there. But the meme stocks are seeing a little bit of a comeback and some really interesting storylines here. The meme stocks got their start in early 2021, and we saw a lot of IPOs around that same time. Oscar was one of them. In fact, I think it IPO'd in April or March of that year. But nevertheless, let's take a look at the 4-day on Oscar. That kind of shot up. That's up 52%. No news there to speak of. But you look at the broad board here over the 4 days, that's a lot of green. Palantir, you can, let me just put this on an equal weight so you get a better view. You do see a lot of green here. And also Circle, I just threw that in. Circle, not an OG meme stock because it just IPO'd, but let's check out this price action here. And I'm going to put a max chart. Could you push that in the upper left?
Can.
Thank you.
Nothing.
One more time. I think 3 times the charm. Oh,
There it
look
is.
at the magic touch. Here's the max chart, up 675% from its IPO. That is just incredible. And by the way, the revenue split on that with Coinbase, 50%. So 50% of the revenues out the door to Coinbase. And guess who else is looking strong? Coinbase, another meme stock. That is up 27%. So you can see, what is this chart? This is a max. Let's go to a 4-day, and you can see nice breakout here. And the news this week was all about stable coins, so Circle participating from that, and then Coinbase gets half the revenue. Good for them on that. Put it all together, there's a lot of action and a lot of activity in some of these smaller stocks that's maybe compensating for the lack of action in the majors. So
What's on your radar this weekend? Dollar, crypto?
You know, I think I need to take it easy this weekend, but if I had to look at something, I would be paying attention to probably some of the other altcoins. Bitcoin has kind of slowed down. I want to see some of the altcoins pick up momentum, and then maybe we get that thrust to all-time highs.
All right, there it is. Thank you, Jared. Appreciate it. Stick around. Much more Ask for a Trend still to come. Yahoo Finance has been at Cannes Lions all week talking executives and industry leaders. Executive editor Brian Sozzi sat down with former BET CEO Deborah Lee in Cannes to discuss the latest in the media industry.
All right, joining me here at Cannes Lions is former BET CEO and author of I Am Deborah Lee. Deborah Lee, good to see you.
All right, thank you.
So BET is still under the Paramount umbrella. So Paramount is still looking to close that deal with Skydance. How has nobody stepped up and just opened up a checkbook real wide for an asset like BET, an historic asset that is still putting out some darn good content?
Yeah, I don't understand it. I wasn't involved when they tried to sell it a couple of years ago. I heard some of the potential buyers, thought it was overpriced. But BET is still very unique. And when they have things like the BET Awards or things happen in the Black community, Black viewers and other viewers go there first. So it's still doing well. They just celebrated their 45th anniversary. I was there for 32 of those 45 years, so I still feel a tug toward it. But I don't know. I really hope it makes it through the merger and that someone takes it under their arm and really continues the magic that is BET. When I was there, when Viacom purchased BET.
Sumner Redstone days?
Sumner Redstone and Mel Karmazin. Yep. And Mel Karmazin was the operator, he was COO, and he loved BET. And, he said one time in negotiation, what do you think, 2 Jewish guys are going to run BET? I don't think I've ever said that publicly, but he let us do our thing, and as long as ratings were going in the right direction, he was happy and he was supportive. So I hope they have that kind of support in whatever new structure there is. There's so much going on in the media business right now. Everyone's trying to survive, linear networks, streaming networks. I've seen it, the past 40 years. I've never seen anything this volatile.
This Cannes Lions comes at quite a moment. I know you can't just talk specifically.
Right.
But Warner Brothers has decided to split. Comcast is splitting. Paramount is nearing, for them, hopefully, closing that deal with Skydance. But what I can't figure out, Deborah, is what happens to linear TV networks? Do they eventually, you have the managers in there, they're cutting a lot of expenses because the ad revenue is declining. Where are these assets a decade from now?
That's a great question. I think they still have a strong life. I just don't know how long it is. I mean, they're still generating lots of revenue now. I left BET and Viacom almost 8 years ago, and I saw this coming. I mean, I'll be honest, I saw it coming. Resources were being pushed into streaming. Linear networks were fighting for resources. But the viewing audience is still there. You look at channels like BET or TNT or Discovery. So the audiences are still there, and not everybody wants to be on streaming. And it's funny to me, because I remember when cable operators said, oh, we need a la carte. People don't want to pay for all these networks. So they tried to force that. It never happened. But now you have 5 or 6 streaming services. People who love content put all those streaming services together, and we're back to cable the way it looked 20 years ago. So I think there'll be consolidation on the streaming side. I think there may be some consolidation on the linear side. But linear networks are still strong, and they're going to be around for a while. It's just in what form.
How difficult is it to separate a linear operation from a streaming network? I think there's sense that, poof, we're going to split these companies up. One's going to trade publicly, the other one is going to go somewhere else. I mean, it doesn't exactly work like that, though.
No, I think it's harder than most people realize. And the interesting thing is, for the past 5 to 10 years, we've been putting them together. We have to have the linear networks with the streaming
linear
networks.
TV,
yes.
That content creates the streaming content,
right.
and we're all going to make a lot of money.
Right.
And lastly, Deborah, can the linear TV networks as a standalone asset, they're going to be public? I think of what Comcast is doing. I mean, what does that a public company look like? Is it a company managed for cost savings? And they have to maybe not put out the most amazing programming because they're so mindful of the switch to streaming.
Yeah, I think they have to do both. They have to cut costs, as does streaming, and they have to continue to invest in programming. Maybe not as much as they used to, because they are competing against streaming, but they have to keep the consumers interested. Consumers find the programming they want, so they have to create content on a continuous basis, and they have to market it. Hence why we're at Cannes Lion, yes. Because marketing is very important. Brands are very important. Cable introduced the idea of diversity in media and programming. Before that, we had 4 networks, if you count Fox, and cable was the promise of diversity. Oh, you can have a women's network, you can have a network for Hispanics, for golf, and so all of a sudden you had 500 channels, and now that's being cut back, but people still want their favorite brands, and if they don't see them on streaming, they're going to continue to watch linear. So we have some restructuring to get through.
All right, fair enough. Former BET CEO and author of I Am Deborah Lee. Deborah Lee, good to see you here. Thanks for stopping by. I appreciate it.
Thank you, Ryan. Thanks for having me.
Of course.
Mark Walter is acquiring a majority stake in the Lakers at a $10 billion valuation, the highest price ever paid for a sports franchise. Let's bring in now Joe Pompliano, host of the Yahoo Finance Sports Report, to break down the deal and what this means for the industry. Joe, it is great to see you. So let's talk about the Lakers, Joe. I need to hear your take. I'm curious. $10 billion with a B. What do you make of it?
It's a huge number, especially considering they don't control their arena. I mean, if we think about the Boston Celtics, that sale happened just a few months ago. That previously broke the record for the most expensive U.S. sports franchise sale in history at $6.1 billion. Now, a big knock on the Boston Celtics was that they didn't own their arena either. For the Lakers, that obviously doesn't matter. But I think the bigger story here is, first off, what does Mark Walter do? Obviously, he owns the Dodgers. He has a big portfolio in sports across the Cadillac Formula One team. He's a part owner in Chelsea, the WNBA Sparks, and a bunch of other sports assets too. He's proven to be a great owner. I don't think the Lakers have anything to worry about. But to me, the bigger story is how the NBA has changed since Jerry Buss acquired this team in 1979. When he bought the team, he paid $67.5 million for a portfolio of assets. The Lakers were part of that, but so were the NHL's Kings, the Forum, and even a ranch was thrown into the deal. But the way that I think about this is that the NBA has changed so much that the Buss family really couldn't afford to own this team anymore. If you think about most of the owners in the NBA today, their sports team is part of their portfolio. Most of them make billions of dollars everywhere else, and they buy a team, and it's one piece of their portfolio. For the Buss family, the Lakers were their primary source, an overwhelmingly source of income over the last couple of decades. Now, that means their team had to be profitable, where a lot of other owners like Steve Ballmer with the Clippers, the Warriors, etc., could spend money on long-term investments. That has caught up with the Lakers over the years as they've been reluctant to add analytics people and new facilities and different things like that. So now I think the Lakers will have an ownership group that can invest in those things. Plus, the Buss family is going to maintain a smaller stake in the team, I think around 18%, and they'll get to take billions of dollars off the table. Pretty good deal all around, it seems.
So, Joe, the Lakers and Celtics get sold. What does it take to get Dolan to sell the Knicks after he sees these kind of price tags we're talking about?
A lot of people are hoping that he figures out what it takes soon, because I think they would love to see that happen. But Dolan has shown time and time again that he has no interest in selling Knicks. I know there's been people that have even made rumored offers over the years, and he hasn't even listened to them. So look, 10 billion is a huge number, but I'm not even sure that would do it for Dolan. These prices are going to continue to climb, especially with the new media rights deal that they've signed. And this probably kickstarts the tires on some of the expansion talk that we've heard over the years. The NBA has been clear that they want to add 2 new teams. At their next Board of Governors meeting, they're supposed to kickstart that process to actually form a committee to see where those teams might go. Those teams now are going to set record prices, and every new sale that happens, whether it's 6 billion or 10 billion, it's pushing that expansion price higher, which means more money for all the other owners. Now, James Dolan has been a little bit reluctant to add some of these expansion teams because he doesn't want to cut down the money that he's getting from the NBA every year and share that with more people. But you also got to remember that they're going to get a piece of that expansion fee as well. So he's not in any rush to sell it, and I don't blame him.
Joe, on your Substack, my friend, you write about FIFA's new Club World Cup, and you write a $1 billion bet that could either globalize the game or break it. What did you mean by that, Joe?
Yeah, so if you think about the Club World Cup, FIFA has been trying to do this for a long time. I mean, the tournament has existed, but they're revamping it for this year in the United States. It's actually going on right now. And on the surface, it sounds like a fantastic idea. There's 32 teams from 6 continents. They're going to play about 60 games in a month, and they're competing for $1 billion in prize money. Now, there's an amateur team. There's a bunch of other smaller teams from smaller countries, but there's also PSG, Chelsea, Real Madrid, and a bunch of big teams as well. So it sounds like a great idea. It's basically the Champions League with some other countries involved. Now, the only problem with this is that FIFA is essentially trying to take away some of the power from UEFA, who runs the Champions League. And they're doing it in sort of a backdoor way. If you think about how they're able to pay $1 billion in prize money, they're able to pay that because DAZN, the streaming company, agreed to pay them $1 billion for the streaming rights. Now, DAZN made the games free to watch. So you're probably wondering, how are they going to pay $1 billion and make that money back? Well, conveniently, after that $1 billion was paid, Saudi Arabia made a $1 billion investment in DAZN. Saudi Arabia is also hosting the World Cup, which they won unopposed. So some people think there's some nefarious things going on with FIFA to start, but also the way that the prize money is distributed means that a lot of it's probably going to end up going to the richest clubs in the world. We're talking those PSGs, those Chelsea, those Real Madrids. So it could make the rich even richer, giving them more money to invest in training facilities, staff, transfer fees, etc. And even if it does go to the smaller teams, a lot of those clubs are operating on budgets that are only a few $1 million a year. So if they go out and they win 10, 20, $30 million, you're now 3, 4, 10xing your annual budget, and you're going to give them a significant advantage in their domestic league, which makes it harder for some of their competitors to catch up. So I think people are really just worried about, one, where this money is coming from, but two, what the teams are going to do with the money, considering not all of the biggest teams and not all of the clubs are included in this competition.
All right, great reporting as always. Joe, thank you, sir. Appreciate it. Be sure to scan the QR code below so you can stay up to date with the latest episodes of the Yahoo Finance Sports Report that drops every Thursday at 5 p.m. Eastern. Well, Meta and Oakley collaborating to deliver a new category of performance AI glasses. Yahoo Finance's Dan Halley is here with more. Dan.
That's right, Josh. Meta announced today that they're launching the Oakley Houston line of kind of AI sunglasses, basically. They've got Patrick Mahomes as one of the leading spokespeople who's advertising for this. And essentially, it's more or less the same as you would get out of the Ray-Ban Meta sunglasses, where you can speak to an AI assistant. You have built-in cameras. You have built-in speakers, so you can listen to music directly into your ears. But it's the new style. It's the Oakley Houston style of sunglasses. So you're going to get that new look, new design, potentially bring in a new market. They're basically saying that this is great for sports. You can ask things like, if you're golfing, what the wind direction and speed are, and it'll give you the information on that so that you can adjust your shot. I don't know anything about golf, so I'll assume that that's good to know. And the price is rather high, though. The limited edition version is starting out at $499, and then the regular version will be $399. So that's a lot of cash for some shades, although Oakleys obviously aren't cheap. Ray-Bans aren't cheap either. So if you want to get the AI element here, and this is all part of Meta's push into AI smart glasses, the thinking here is that Meta is looking for the next type of big product after the smartphone. They are leaning more into smart glasses. Google obviously also in there as well. Apple reportedly in there. Some people think that it'll just be a peripheral for the smartphone. Others, like Meta, seem to think it will be that gadget. So we'll just have to wait and see if more people go ahead and purchase these types of devices. Meta's already said they sold millions of units of the Ray-Ban, though. So it looks like there is a rabid audience. And with the Oakleys, it might be more people who are into the sports lifestyle that might want to grab these.
All right. Thank you, Dan. Appreciate it. Time now for what to watch in earnings coming up. We are looking ahead to releases from FedEx, Micron, and Nike. Let's start off here with FedEx, which is reporting earnings on Tuesday. Shipping companies seeing some serious issues like demand challenges and U.S. tariff policies, which could push FedEx's Q4 earnings lower. Analysts say that improvement in the company's productivity and demand from companies rushing products out before Trump's tariff deadline, two factors that could keep FedEx on par with expectations. Meanwhile, Micron reporting earnings on Wednesday. That's after market hours. Stock shooting up ahead of the release. Investors looking for growth in all segments for the computer, memory, and data storage manufacturer. Wedbush raising its price target for that stock to $150 today, citing higher prices for memory chips as a main motivation for the company to beat Q3 revenue and earnings expectations. And finally, Nike releasing fourth quarter results after market hours on Thursday. The athletics company struggling this year with tariffs, hurting the company's bottom line and offering big discounts to offload products that didn't sell. Analysts saying Nike warnings sales could drop around 15% year over year. That is a wrap on today's Ask for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.